The rally has started since mid-22 because Russia's central bank reserves got frozen and central bank buying increased by a factor of 5. That's really the structural part of the rally. If you go back over the last 2 months, we have seen a big pickup in ETF inflows, both because rates have been coming down and because there's a lot of uncertainty about the US policy outlook. And then if I go back at the rally of the last few weeks, when we broke through 3,000, it was really a pickup in spec positioning. So it's really a combination of those three forces at different horizons that have pushed us again to an all-time high. And actually, we look for additional increases. We expect the gold price to reach $3,300 per troy ounce by year end, with even upside risk to our bullish forecast.
Wow, okay. And what if we get a peace agreement between Ukraine and Russia? Does your expectation still hold that we'll see a continued rally? How's that going to impact gold?
I would expect a temporary pullback in speculative positioning. However, I think the structurally tight supply-demand picture in the gold market would not change with a potential Russia-Ukraine peace deal. Why? On the supply side, we actually have seen an increase in Russian gold exports since the start of the sanctions via countries in the CIS and also via the UAE. Actually, we have seen a destocking of Russian gold reserves, perhaps because Russia needs the money more with high defense spending needs, and because when gold prices are high, if you export more, you get more revenues. And so if we were to see a peace deal, you could actually see a lower export volumes from Russia hitting the global market and therefore upward pressure on prices. On the demand side, we think that a major precedent has been set in 22 when the reserves were frozen. We think the risk calculus for EM, central bank reserve managers, has changed. And I think they will continue to diversify their reserves away and raise their gold reserve shares.
So central banks will continue to stockpile gold as part of their reserves?
That's right. We did a back-of-the-envelope scenario analysis in a piece published with my colleague Lena Thomas this week, suggesting that the very rapid purchases by EM central banks, including in Asia, at the recent very rapid pace, could continue for another 3 to 6 years, based on where we think ultimately the gold reserve ratio may settle.